Today, Bitcoin slips a day after the Fed's latest rate cut. Terraform Labs founder Do Kwon is set to be sentenced for fraud. And 21 Shares chief investment strategist Adrian Fritz discusses the asset manager's new spot XRP ETF, which started trading today. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies in the red this morning following the Fed's latest rate cut. As of noon Eastern, Bitcoin fell below $90,000, but then inched back above that level about an hour later. Ether dropped more than 5% to $3,174, and XRP was trading just shy of $2 after 21 Shares' new spot crypto ETF tied to the cryptocurrency started trading today. We'll have more on that new product in just a bit. All right, let's take a look at some of what else is making headlines today. Shares of Gemini surging as the company plans to enter prediction markets. The firm announced yesterday its affiliate Gemini Titan received a license from the CFTC to offer prediction markets to U.S. users. The announcement said it took 5 years to obtain the license, and CEO Tyler Winklevoss thanked President Trump and acting CFTC Chair Caroline Pham for their roles in, quote, making America the crypto capital of the world. As of noon, Gemini shares soared more than 20%. Now, this comes as more and more crypto firms look to embrace prediction markets to expand their revenue sources. Robinhood's CEO Vlad Tenev discussed the benefits of offering prediction markets to CNBC just last week, saying there would still be some trading on the platform even if there is some weakness on the crypto side. Meanwhile, Coinbase told CNBC back in July that the firm also had plans to launch prediction markets along with other new products. Next, Bitwise wants to offer TradFi investors broad crypto exposure. This week, the asset manager launched a new ETF that follows 10 crypto tokens. Dubbed Bitwise 10 Crypto Index ETF and trades with the ticker BITW, the fund tracks Bitcoin, Ether, XRP, Solana, Chainlink, Litecoin, Cardano, Avalanche, Sui, and Polkadot. Many crypto-tied ETFs launched in the past 2 years only have tracked one or two cryptocurrencies. Bitwise CEO Hunter Horsley told CNBC it's a perfect time for investors who've been following the space since the launch of spot Bitcoin ETFs, but want a more comprehensive solution to allocating to digital assets. And last, Do Kwon is set to be sentenced today. As a reminder, he's the co-founder of Terraform Labs, the company behind the failed algorithmic stablecoin Terra USD. Do Kwon pleaded guilty to fraud charges back in August after a lengthy effort to get him extradited to the United States from Montenegro. Last week, prosecutors recommended a sentencing of 12 years. That's more than double of his defense team's request of no more than 5 years. Be sure to check out CNBC.com for the very latest updates on the sentencing. All right, back to 21 Shares for our main story. As we mentioned earlier, the asset manager is broadening its spot crypto lineup in the U.S. with today's launch of its spot XRP ETF. 21 Shares also released its State of Crypto report today, outlining the firm's 2026 market outlook. I spoke with chief investment strategist Adrian Fritz, who had an active role in putting together the new report, about predictions for the new year and the new spot XRP ETF. Today, 21 Shares debuted its spot XRP ETF in the U.S. amid increased demand from clients for diversified crypto exposure. Now, 21 Shares already offers a spot Bitcoin and Ether ETF in the U.S. So what made the asset manager want to launch a product focused on XRP specifically?
I would say it's a natural progression, just giving the regulatory tailwinds in the US and also just client demand. We're moving across the long tail of crypto assets, and XRP was a natural next step.
Now, we're seeing so many of these ETFs tied to altcoins pop up here in the US, including other spot XRP ETFs from asset managers like Canary Capital. That product launched last month. Do you think the market is becoming oversaturated with these investment vehicles, or do you think there is enough demand to go around for all of them to succeed?
That's a very good question. I would say we're still at the very beginning of the digital asset adoption, and that's why it's good to have a variety of options and offerings out in the market. I would say the good thing is just because 21 Shares, we are a asset manager, Swiss born and raised, and now bringing our 8-year track record to the US. And here we already seen that, naturally clients move up or move beyond just Bitcoin and Ethereum. And usually the demand picks up for crypto assets beyond the big two.
21 Shares also dropped its State of Crypto report today, outlining predictions for the year ahead. And I want to point to some of the highlights, especially because you played a big role in putting this new report together. So sticking with the topic of spot crypto ETFs, I want to start off with your 2026 prediction for crypto ETPs. 21 Shares believes these products globally will outpace the NASDAQ 100 ETF by the end of next year. I know that regulatory advancements for crypto around the world is a big factor, but what are some of the other reasons behind this prediction?
I mean, as just mentioned, obviously it's that structural foundation, the pipelines that are being set for institutional investors, for traditional investors to get access to crypto assets. And it's not only happening in the US, which obviously is the biggest driver, the biggest capital market. It's actually happening around the globe. We see clear inflows across Europe. I think UK is the best example. They also just removed their retail ban. So also here we will see demand picking up. Asia, the Middle East. So obviously we're comparing a global adoption curve to the QQQ. But overall, we think that, crypto ETPs globally will reach 400 billion in 2026.
And it certainly will be very interesting to see if that happens. Your new report also argues that Bitcoin is ending its traditional 4-year cycle. Bitwise CEO Hunter Horsley also recently declared that the 4-year cycle is dead, as did Fundstrat's Tom Lee, among others. Your report notes that the halving still matters, but each event's marginal impact is diminishing, which signals Bitcoin's transition away from cyclical boom and busts toward maturity as a macro asset. Can you break down why 21 Shares believes the 4-year cycle no longer really defines what happens to Bitcoin?
It's just because the halving is marginally less impactful. I mean, the inflation rate of Bitcoin is now below 1%, below the inflation rate of gold, for instance. And just structurally, we believe that, the cycles are much more driven by structural demand, by liquidity, by the macro conditions in the market, and therefore we might see some short-term volatility. We might be just looking at the chart in a bear market, in a panda market, if you want to call it like that. But let's not forget, sentiment can change quickly, like it always does, and therefore overall we think that traditional 4-year cycle is over.
Earlier this week, I spoke with the CIO at Hashdex about its crypto outlook report for 2026, which also had a whole section focused on tokenization. Hashdex predicts tokenized real-world assets will grow by a factor of 10 next year. But 21 Shares is making an even bolder prediction for tokenized real-world assets, forecasting that they will increase from $35 billion in total value locked this year to over $500 billion next year. One reason cited in your report, the Clarity Act, which would give banks and asset managers approval to issue and custody tokenized instruments on public blockchains. So can you take us through some of the other reasons for this bold prediction?
It is definitely a bold prediction, but obviously tokenization and stablecoins continue to be the big themes and the big value drivers for the entire crypto market. And we believe it will just keep on accelerating in 2026 as well. There's also a lot of new exciting developments. For instance, the launch of the Canton network that brings more of a combination of private and public blockchain, kind of like a permission blockchain. But it's already seen a big appeal of big financial institutions, and they will launch with a big chunk of tokenized assets, which will catapult us towards that 500 billion.
You mentioned stablecoins. Focusing on stablecoins, 21 Shares predicts that the supply will reach $1 trillion in 2026 because of developments like the Genius Act stablecoin bill becoming law over the summer here in the US, leading to surging adoption. What do you think we will see next year as it relates to stablecoins?
I mean, I would say that's one of our boldest predictions, and we didn't want to settle for a number like 750 or 800. I think the 1 trillion mark is much more significant. But let's be honest, stablecoins are still the best product market fit when it comes to crypto. And now, given all the regulatory tailwinds that we see coming from the US, but also in Europe and across the globe, we will see more integrations and we will see more adoption. And it's being embraced by, a lot of institutions, states, but we truly believe it will become the backbone of especially fintech platforms and companies. We've seen Revolut, we've seen PayPal, and we clearly see this. That is a trend that will continue, and we'll see more fintech players embracing stablecoins, and that's what we love to see. To be honest, I always say a lot of investors, they ask us, how do you see the future of crypto and blockchain? I always say it's actually pretty boring, because all that is happening is that we're building financial infrastructure. We are upgrading the financial infrastructure to the age of the internet. And crypto and blockchain is the real fintech. And that's why I would say we would see a lot of fintech players around the globe building on top of blockchain and using stablecoins for global settlements.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.